Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Today we're looking at the Fed's view of commercial real estate. We have Brian Bailey with us. He's a senior technical expert with the Federal Reserve Bank of Atlanta. And Brian, banks are, they're important to the economy. They're important to commercial real estate. If they start pulling back or having problems, it can have impact on commercial real estate and investors' decisions. So what are the state of banks today? How are they doing?
And that's why we're spending so much time in the banks right now trying to make sure that, we are ensuring the safety and soundness of the financial system. Certainly, the banks have been under pressure for a number of years, but as, the fundamentals in the economy have picked up, commercial real estate has picked up, and certainly that has led to improvement in the conditions in the banks. And so, it certainly is good news. I'm not sure that the banks are quite where they want to be these days, but certainly,
but they're profitable.
That's right. We've made it through the downturn. We've dealt with they've dealt with a number of the issues associated with, some of the assets, some of the poor quality assets. And so certainly there has been an improvement. Certainly, the banks continue, are engaged in business that continues to metamorphosize, whether it's driven by new legislation and regulation, or whether it's driven by changing market conditions. And I think that change, is occurring very rapidly right now. And so certainly, that has put, a new form of stress, I think, in the banking community. At the same point, we look to our survey. We do a senior loan officer survey, the Board of Governors does. And, the banks are telling us that they're beginning to get a little bit hesitant about lending in the commercial real estate arena. And we've had kind of this trend upward in those results. So and we've given you a slide. There's a slide that's available that talks about that shows kind of this upward trend as far as the number of banks that are tightening their underwriting standards. And in the last quarter, a pretty significant number of banks reported that they're tightening their underwriting standards on lending in the non-farm, non-res, that's the highly technical term for office and retail and industrial and hotel space, multifamily, and then C&D, the construction and development, the land, the area where land loans would be made also. So the banks are beginning to get a little bit hesitant. It's interesting in my mind because you look at the economy, we've created on average 200,000 jobs or more a month for the last 24 months. Yeah. So certainly, going very solidly.
And the fundamentals of real estate are strong.
The fundamentals of real estate have followed, and so certainly, it's interesting to see, the economy on more solid footing, yet the banks kind of getting a little bit hesitant toward commercial real estate. And so we'll continue to watch that play out. At the same point, we are seeing, that the banks are reporting that there are more opportunities for net loan growth. So the phone's ringing. It's not ringing as often as it was, say, a year ago when we had 20 or 25% of the respondents saying that they felt that the opportunities were growing. Now it's down around, 10 to 15%. But certainly there are still opportunities, for net loan growth. And so certainly, you look at the numbers, the balances in the banks. Multifamily lending, the balances at the banks are at all-time highs over the last 8 years. The same thing with non-farm, non-res, the same thing with other CRE. And so certainly, the banks have been making loans in the space. At the same point, there is the appearance of some hesitation.
Was that hesitation based on because their percentage of their loans being in commercial real estate or maybe getting a little higher than they would like or you guys would like, or is it more that they're they're seeing some concern about commercial real estate fundamentals.
Right. And that's a big question.
Yeah. We only ask big ones.
That's right. Yeah. I want the easy ones, please. Give me the easy ones. It's hard for me to speak to the hesitation, as a group as far as the banking industry is concerned. Mm-hmm. I can tell you that certainly from my point of view, the banks who have concentrations over the guidance, the 0701 071 guidance, the 300% of capital, are getting more scrutiny. Mm-hmm. And so certainly, my hope is that, they're kind of looking, very hard at the composition of loans that they're making and that they have on the books right now. Because, certainly, when when the Fed went back and looked at, the reasons for for a significant number of bank failures, one of the things that we were able to trace it to was institutions that were over those guidelines. Mm-hmm. And so it remains a guideline, but certainly, those institutions are having to spend more time with the regulators.
And you mentioned that the banks are doing better and they're doing well. How is that compared to the smaller community banks and then the larger banks?
And it's a good question. Again, huge subsets. Mm-hmm. And I've got to make the disclaimer. The community banks are more driven on the makeup of the industry in their area. Mm-hmm. So you think about community banks here. Obviously, there is a component of commercial real estate. You go to the Midwest. You go to the South Mississippi River Valley. And there's much more concentration on agricultural lending. You go to Texas and up through North Dakota right now, and certainly, there's a huge focus on energy, and there are struggles right now in that realm. Compared to larger banks, they've got a much broader footprint, and so they're able to kind of weather some of that a little bit. But I think that the performance obviously is driven a little bit by kind of your exposure to the industry in your area.
But overall, if you just kind of bulked them, are the bigger banks doing better than the smaller banks based on maybe some of the regulations and the cost of dealing with that? Is that easier for the bigger banks to do well, or?
I mean, the bigger banks certainly are under a much higher level of scrutiny, in my view, as far as the regulation is concerned. Certainly, that some of it trickles down to the community banks, and any banker right now would probably say, we're under a lot of regulation. We're spending a lot of time with our regulators.
Any businessman, out there.
Absolutely. But I'm not really in a position where I can quantify the results of big versus smaller institutions.
Yeah, and you mentioned that the fundamentals of commercial real estate are doing well, but some lenders are a little bit hesitant to do loans, and that could have a big impact on some of the borrowers out there, couldn't it?
Well, I mean, it's an interesting circumstance. Yeah. I mean, you think about that, and what that could do is it probably mitigates the potential for a vast oversupply issue to occur. Mm-hmm. And we may lengthen the actual cycle in commercial real estate because there's not this kind of huge upswing in a bunch of space under construction, which then hits the market all at the same time, and those owners have to offer concessions to fill it.
Yeah, and that brings up a lot of questions, like if you're a borrower, what are some tips for securing loans, right? And also, how much new supply have we had, and how are the fundamentals? We'll get a lot more from Brian Bailey right after this break. This is the Commercial Real Estate Show. Stay with us. Hey there, thanks for checking out the Commercial Real Estate Show. Don't miss a video of special interest to you. Be sure to subscribe below. And if you appreciate the videos, be sure and thank our sponsors. There's a link to more information about them in the description. For more videos, podcasts, and articles, check out CREshow.com.